All right, let's jump right in. We are living through one of the biggest technological shifts in history. I'm talking about AI, robotics, fintech, even quantum computing. These aren't just ideas for the future anymore. They are actively changing our world, right now. And with that change comes a whole new world of investment opportunities. So today, we're going to break down this new frontier.
And that brings me to the big question for this entire explainer, really. Is your portfolio actually ready for what's coming? Because the old ways of doing things are getting completely upended, and they're being disrupted faster than ever. Understanding where that change is happening, well, that's going to be the key to navigating what's next.
Okay, let's dive into our first section, which I'm calling the Great Upheaval. This is where we look at the real conflict that's playing out everywhere. This battle between these old, clunky, outdated industries and the fast, new tech that's coming in to replace them. Let's start with a perfect example, banking. I mean, this slide pretty much sums it up, right? On one side, you've got the legacy system we've all had to deal with. You know, the long lines, the annoying fees, the painfully slow processes. And on the other side, the fintech revolution. We're talking instant, mobile first, and way cheaper. This isn't just about making things a little more convenient. It's a total reinvention of how money works. And it's exactly why so much money is pouring into this space.
And this upheaval isn't just happening in the digital world. It's totally transforming the physical world too. I mean, just think about the backbone of all our online shopping, the warehouse. The old way relied on manual labor, which, is slow and people make mistakes. But the new model, it's all about automation. We're talking AI-powered robots zipping around, sorting and packing things with incredible speed and accuracy. This isn't some sci-fi movie. It's happening as we speak, and it's changing global logistics forever.
So, now that we've seen the problems, let's meet some of the problem solvers. In this next section, we're going to introduce the specific companies that are out there on the front lines. These are the digital disruptors literally building the economy of tomorrow.
First up is a company called Cloudflare. What they do, in a nutshell, is modernize the internet's ancient infrastructure. It was basically built in the 70s. Think of them like a highway patrol for your data, keeping it fast and safe. Now, their stock recently took a 26% dive after a software glitch. And it's important to note, it was a glitch, not a hack. A lot of people think this was a huge overreaction because a temporary issue doesn't really change their long-term value. And that long-term story is all about their evolution into a connectivity cloud, the essential plumbing that the entire AI industry is going to depend on. Now, let's head down to Latin America. This is a region where a massive number of people have been completely left out by traditional banks. They're just too inefficient and hard to access. Well, that is the huge problem that Nubank is solving. It's not just another digital bank. It's a true super app that puts a whole financial world, accounts, loans, shopping, right into the hands of millions of people for the very first time.
And how's that strategy going for them? Well, this number says it all. 40% annual revenue growth. That is absolutely explosive. But you know what's even more impressive? Their revenue is growing way, way faster than their costs. That means they're operating with incredible efficiency. They've already taken over Brazil, and now they're expanding fast into Mexico and Colombia. This is what disruption looks like in the numbers.
All right, let's come back to the US, where a company called SoFi is trying to build the American version of that super app. Their whole strategy is built on three main pillars. First, there's financial services, checking and savings accounts to get new customers in the door. Second is their main moneymaker, lending, everything from personal loans to mortgages. And third is their secret weapon, their tech platform, Galileo, which actually provides the behind-the-scenes tech for other fintech companies, like Robinhood. This diversification is so key to their whole model. Now, to really understand how healthy SoFi is, you have to know about this metric that people in the software world use called the Rule of 40. It's actually pretty simple. You just add a company's revenue growth rate to its profit margin. If that number is over 40, the company is considered to be growing in a really healthy, sustainable way. SoFi score, it's 67. That's not just growth. That is super efficient, profitable growth, and it's what really makes them stand out from the competition. Okay, so we've met some of the disruptors. Now, let's go a little deeper. Let's look at the foundational technologies that are really the brains behind this whole operation. We're talking about the AI, the robotics, and yes, the quantum computing that makes all of this possible.
And we have to start with the giant in the room, Alphabet, better known as Google. You know, when one of the most famous investors in the world, Warren Buffett, has his firm drop a staggering $4.3 billion into a company, that sends a pretty powerful signal. It means he's seeing some deep, fundamental value that maybe the rest of the market is missing. So, what exactly is he seeing?
Well, let's break it down. First off, valuation. If you compare it to other tech giants, Google's price-to-earnings ratio is actually pretty low, which makes it look like a bargain. Second, Google Cloud is on fire. It's turning into a huge revenue machine for them. And third, and this is the really big one, is AI. They're weaving their powerful AI models like Gemini right into their cloud and search products, which is just turbocharging growth in both of those key areas. All right, let's shift from the digital world of AI to the physical world of automation. We're going to look at two key companies that are making robots a real thing in our warehouses and factories, Symbotic and Teradyne.
Symbotic has this incredibly ambitious mission to completely automate warehouses using a combination of AI and robotics. Their system cuts down on errors and just dramatically speeds up the whole process. And if you need proof that their tech is the real deal, how about a massive partnership with Walmart to upgrade their distribution centers, a deal that could be worth up to $5 billion? That's an absolute game changer.
Now, let's talk about a totally different kind of robot. Teradyne is a really cool company because they're a leader in two different areas. One, they test the semiconductor chips that power the whole AI revolution. And two, through their Universal Robots division, they build something called cobots. So what the heck is a cobot? It stands for collaborative robot. Unlike those old industrial robots that are locked up in cages, these are designed to work safely right alongside people. They're even creating robots with a sense of touch that can handle delicate things without crushing them.
For our last company, we're taking a leap into something that sounds like it's straight out of science fiction. We are talking about the next generation of computing itself. And one of tech's oldest companies is actually pioneering this new frontier: IBM and the mind-bending world of quantum computing.
To really get why this is such a big deal, you have to understand the basic building block. A normal computer uses bits, which are just a 0 or 1, like an on-off switch. Simple. But a quantum computer uses a qubit. And thanks to the weird rules of quantum physics, a qubit can be a 0, a 1, or both at the same time. This lets them do a kind of parallel processing that could solve problems in minutes that would take our best supercomputers thousands of years. IBM is at the absolute forefront of this, building the foundation for the computers of the future.
Phew, okay. We have covered a ton of ground, from fintech to warehouse robots to quantum computers. So in this final section, we're going to pull it all together into an actual playbook. How can you, as an investor, actually navigate this super exciting, but yeah, often volatile future? First things first, we have to talk about volatility. You hear that word a lot, and it's just a fancy way of saying prices are swinging up and down like crazy. Now, if you're trying to make a quick buck, that's super risky. But here's the secret. For a long-term investor, volatility isn't a threat, it's an opportunity. It's your chance to invest in great companies when their prices are down for a little while because of market noise, not because there's something wrong with the business.
So it all comes down to having the right mindset. And it's really just 3 simple but powerful steps. 1, focus on the product, not the daily stock price. Ask yourself, is this company building something valuable that people will need 5 years from now? 2, practice patience. Real success doesn't just happen overnight. And 3, think long-term. Don't invest money you're going to need next year. Think on a 5 to 10-year timeline.
So how do you actually manage the risk? Well, you've got 2 main paths. On one side, you could go with a concentrated portfolio, where you make big bets on just a few individual stocks. The potential reward there is huge, but so is the risk. On the other side, you have a diversified approach, using things like ETFs or exchange-traded funds. Just think of an ETF as a basket that holds hundreds of different stocks. For example, an ETF like VBK gives you a piece of tons of small, high-growth U.S. companies, while something like VXUS lets you invest in companies all over the world. It spreads out your risk, so if one company fails, it doesn't take down your whole portfolio.
And that really brings us to the bottom line. The foundations of the next 10 years of progress are being built right now, as we speak, in those fintech apps, in those automated warehouses, and in the labs building the quantum computers of tomorrow. So the only question left is, which future are you going to invest in?